Hi friends, good evening. How are you? I know exams are coming nearer and your preparations are going full-fledged. Yes, it's already March and your exams are in May. And I hope I'm visible, audible properly. Just give me a thumbs up if I'm audible, visible properly. Okay. Thank you, Venkatesh. Now, today's session, we are going to discuss the RTP of FR. So, May 23 exam RTP has been released. FR RTP we are discussing today. And next Sunday, we'll be discussing your audit RTP. So, CA final FR, CA final audit, both the RTPs will get discussed Sunday on Sunday. Now, coming to this amendments. Sir, how much amendments are there basically in FR? Now, see, FR is a subject wherein amendments are very few. Frankly, amendments come very few in FR because this subject doesn't change much. It is not like your DT or IDT. So what we need to cover up whenever you are appearing for your examination, what you should be doing. Number one, this is requirements. Number one, you need to finish your class material. Okay, sir, I attended your batch 2 attempts back. Is it fine? Chalega. Whichever batch you have attended, it is fine. So, class material, whichever batch you attended, that's okay. Number two, you need to cover up all amendment class which we have come up with. Amendment classes after your coaching. And number three, what you need to cover is your past RTPs and suggested answers. The last 3 RTPs and exam papers. That is suggested answers. Okay. So these are the things which you are required to do. First, you need to finish up the class material. Sir, I referred your 2 attempts back wala batch. It's okay. Don't worry at all. Uske baad, if I come up with 1 or 2 amendment session, do that. Last 3 RTPs and exam papers, this is must to be done by you. Whenever you do this, automatically all your amendments will be getting covered. Now, today what we are discussing. Today's discussion is about your RTP May 23 of FR. Okay, we'll come out with one more session. There will be one more session for additional ICAI question. ICAI came up with a new material. So additional ICAI, few questions they've added, no concepts. It's just the questions, no new concepts. This will be coming up later. So this probably will be ya to next Sunday or next to next Sunday. So I'll be taking only on Sundays this amendment classes or basically this RTPs. This will help you to attend it and you can continue normal studies which are going on. Now, let us start the FR. We have one RTP session, one more session for additional ICI question. These are the 2 things will be there. And for auditing also, we'll have RTP session, but that again will be planned off and will be messaged to you on your Telegram channel. Now, coming over here, you see over here the material is there. RTP same I opened. Few things are highlighted. Now, sir, where can I get this highlighted material? So we have a Google Drive link for the material which has been created, which is there in our Telegram channel. You can just download the material from there. So if you click on that link for Google Drive, wahan pe go to folder named as others. And others folder me, you'll find this RTP. Okay. And in case you have a physical copy with you, you can highlight it together whenever you are doing this class as well. Shall we begin? Shall we begin? Chalo, thank you. Now, amendment is actually only in one chapter. Only one chapter there's amendment, that is your corporate social responsibility. In your CSR chapter, there is amendment. What is the amendment? First, we'll see amendments, then we'll go basically to your questions which have been given over here. Now, if I check over here, this is Amendment to Corporate Social Responsibility Rules 2014, and these are applicable for May 23 exams. If at all you have something amount unspent of CSR, if at all some amount is unspent, you need to spend is 2% of average net profit of last 3 years. If unspent amount is there, there has to be a committee of CSR which has to ensure that amount is getting spent. So any amount which is outstanding in unspent CSR amount, that company has to mandatorily create a CSR committee. If you just recall, there was a point wherein if at all the CSR amount to be spent was less than 50 lakhs. If CSR amount to be spent was less than 50 lakhs, you don't need a committee. Remember? CSR amount to be spent less than 50 lakhs, CSR committee was not required. Then that function can be done directly by board. But if there is unspent amount, if company has unspent amount, then CSR committee mandatory. If company has unspent amount, तो फिर CSR committee becomes mandatory. Did you got this amendment? Okay. Now, Venkatesh has a question, sir. Additional questions are already covered in previous RTPs or totally new question? Dear, they are already covered in your previous RTPs only. So, as such, if someone has done all the RTPs, they will not have a problem. But I generally come out with an additional sheet covering all the questions which were there in RTPs but not covered in our material earlier. Okay, this is one. Now, tell me one thing. Once you fall in CSR, we have to check the limits of last year. Okay, last year if the limits are crossed, so this year CSR applicable. Okay, this year limits are not crossed. Can I stop CSR from next year? Last year limits were crossed. This year CSR applicable. This year limits are not crossed. So whether next year CSR was stopping, answer was no. If you recall, once CSR applicable, it was applicable for minimum 3 years. So 3 consecutive years ke liye it was there. So you needed to check basically that 3 consecutive years, if you don't fall, then you are exempted. Now that is omitted. So check, this is important. Now this is important. This is rule 3 bracket 2 required that every company that ceased to fulfill criteria for 3 consecutive years is not required to constitute a CSR committee. Rule 3.2 has been omitted. So now if last year my limits are not crossed, CSR not applicable. Therefore, now if last year limits are not crossed, CSR not applicable. So that requirement of 3 consecutive years is removed. Requirement of the 3 consecutive years is removed. If last year limits are not crossed, CSR not applicable. Did you got it? This is the second amendment. Now, you may do CSR on your own. Okay, if I have to do CSR, I can do on my own, or I can do it through implementing agencies. I can take the help of some agencies. Implementing agencies I can take. Now, they've given you what comes under the implementing agencies. What are included in implementing agencies? That is included. Inclusion in the list of entities that can be engaged as implementation agencies. Any fund or institution established for charitable purpose. Any fund or institution established for charitable purpose. Then any trust or institution wholly for religious purpose or for religious and charitable purpose. Any university or educational institution solely working for educational and not for profit. And any hospitals or other institution which are basically for treatment of suffering of illness or mental defectiveness kind of it. So I can do myself or I can do it through implementing agencies. What is covered under implementing agency? That is given. Are you clear? Shall I move ahead? Next one, this is again important. The one important is that instead of the 3 years, once applicable for 3 years, that is gone. That is gone now, it has been omitted. And this all are applicable for May 23 exams. Now this one, see what happens is whenever you're doing CSR through implementing agencies, you may spend some money on training that employees, etc. Yeah, the admin related kharcha. And that admin related expenses was allowed up to how many percentage? 5%. Yeah, so up to 5% of total CSR money can be spent on developing that human resource of implementing agencies, etc. That 5% ka limit is now shifted to 2%. That 5% ka limit is now shifted to how many percentage? 2%. Check over here. Earlier, Rule 8 of Companies Corporate Social Responsibility Rules 2014 provided that every company having a CSR obligation. Now, there's one word called as impact assessment. Now, this was actually not given in your ICAI material, but it was there in rules. See, ICAI material doesn't have all rules in detail. So, this was not there in ICAI material, but our rules mein kahin likha tha. What was there in rules? If at all you have an average CSR obligation 10 crores or more, your average CSR obligation is 10 crores or more, you should undertake an impact assessment through an independent agency. Whatever CSR you are doing, what will be the impact of it? The impact assessment aapko karana tha. And this impact assessment was required for projects having an outlay of rupees 1 crore or more. Now, for that impact assessment, the amount which you can spend. See, so whenever I have a CSR which is of 10 crores or more to be done on an annual basis, and one project is of 1 CR or more, to uske liye impact assessment. How much money could I have spent on impact assessment? Earlier it was 5% of total CSR or 50 lakh, whichever is less. 5% of total CSR or 50 lakh, whichever is less. Now this 5% is changed to 2% or 50 lakh, whichever is higher. Now this is changed to 5 ki jagah 2% or 50 lakh, whichever is lower ki jagah, now it is whichever is higher. Are you clear with this? So whenever a company had an average CSR obligation 10 crores or more, in the immediately 3 preceding years, you need to undertake an impact assessment through an implementing agency. Okay, so whatever CSR you have done, okay, finished projects impact assessment. This is actually finished projects impact assessment. And this was through an independent agency. And this was required only for those projects which had a capital outlay 1 crore or more. Now, sir, how much I can spend on this impact assessment ka fee? Nobody will work for free. The impact assessment, how much I can spend for it? Earlier, it was 5% of your CSR spending or 50 lakh, whichever is lower. Now it is 2%. Now it is 2% of your total CSR spending or 50 lakh, whichever is higher. Any doubts? Anybody with this? This point is new one, and that 3 years is gone. That is the new one. That are the only 2 major changes. Now, there's a revision in Annexure 2 and E form, but again, that's not relevant for examination purpose. So whenever you are providing details about CSR, as per your Companies Act, executive summary will be required. Disclosure on the CSR amount which is spent. Now, pay attention. Earlier, disclosure was required project-wise. Now, the disclosure is required in total. I repeat, earlier the disclosure was required project-wise. The amount spent as per the amendment, the companies are required to disclose what? Only the total amount spent. Only the total amount spent. Earlier it was required for each project undertaken separately. Earlier it was for each project undertaken separately, ongoing alag, others alag. Now it's the total amount what you spend that is required to be disclosed. But this is not relevant from exam purpose. Exam purpose, one thing relevant is Earlier it was 3 consecutive years you're out, then only CSR was out. That is the main thing. And number 2, implementing agency, you have a impact. If impact assessment you are doing, impact assessment, earlier 5% of 50 lakh, whichever is lower, now 2% of 50 lakh, whichever is higher. Okay. Now you might be seeing some other amendments which are given. Companies Ind AS Amendment Rules 22. Companies Ind AS Amendment Rules 22. These are already covered in RTP November 22 discussion. The same points were also there in RTP November 22. So I am not covering it again because it will take a time and then basically will get late. So this point's already covered under RTP November 22. I just take one example for you. PPE. PPE में whatever basically you are doing testing. So testing ke time some products are coming out and that products are then sold off. The amount received on sale of the testing products. We generally deduct from the cost of PP. Okay, if at all I get more money, so testing cost 1 lakh, amount received from sale of testing product is 110. Testing cost 1 lakh, amount received on sale of testing is 110. Can I say extra 10 we have got? So earlier it was credited to P&L. Now that 10,000 will be deducted from cost of PP. So whatever net proceeds from sale of item produced during testing will not be credited to P&L. It will be deducted from cost of PPE. Earlier it was in P&L. Now in your IAS 16 it is still P&L. So we take it in deduction from PP. IAS 16 they are taking where? Kahan le rahe ho? They are taking it in P&L. There's a carve out now. So this point is basically there. So similar such points were there. This is already discussed when we did RTP November 22 exam. Shall I move ahead? Okay, next. Thank you, Venkatesh. I directly go to questions. Okay, amendments are over. The only amendments are there in your chapter of CSR, no other place there's amendment. And only one major amendment. Now you don't need to have 3 years to be out of CSR. Last year limits are not fulfilled, CSR not applicable. Now, coming to questions, question number 1. Whichever questions are important, different, I'll go in detail. Whichever questions are normal one, I'll just tell you the concepts. The normal questions are there, which is a routine one, I'll tell you concept. New, which I found out, I'll take it in detail. Okay, this question is a normal one. This is on business combination. Acquisition is in stages. First you acquired 30%, then you acquired 25%. So can I say control comes when you acquire that 25%? Okay, so whenever acquisition is in stages, what happens? Can I say the earlier investment is to be remeasured, brought to its current value? Earlier investment ko remeasure karna padega. So that's over here. Okay, now this is high speed is taking over quick. High speed is taking over quick and balance sheet of quick is given. We got a control on 1st of January. The carrying amount are there, fair value is there. Now can I say in our books, we'll recognize assets and liabilities at its acquisition date, fair value. And only assets and liabilities are recognized, not the capital and reserves. The assets and liabilities of Quick Bikes Limited will be coming in our book at its acquisition date, fair value. Now they have a brand, Superstart. Uska fair value 350, brand was not there in books. Okay, for Quick Bite, the brand was internally generated. But when I take over Quick Bite, I am paying for brand. Whenever I take over Quick Bite, I am paying for brand. So can I record brand as an asset in my books? So upon business combination, unka brand is coming to me. Can I record that brand? Answer is yes. So you can record all this asset plus the brand and this liability in your book. ये सारी चीजें you can record it in your book. And this is your balance sheet given. This is your balance sheet given. From your balance sheet, your investments will go out when you prepare a CFS. Acha, so first of all, as it is acquisition in stages, the earlier investment is to be remeasured. If you just check out earlier investment ka cost, your earlier investment ka cost was 5 lakh. उसका करंट वैल्यू एक्चुअली इज कमिंग 6. सर कैसे है 6? टुडे 25% बॉट फॉर 5 लाख. टुडे 25% बॉट फॉर 5 lakh. तो कहने से 30% का वैल्यू विल बी 6 lakh. Today 25% is 5 lakh, so 30% will be 6 lakh. You bought earlier 30% at 25. You bought earlier 30% at 5 lakh, so 1 lakh is basically the increase in your investments. Okay, if I just go to solution, this 1 lakh rupee which we have credited P&L, this is nothing but investments going up. Remeasurement of earlier investments. Okay? This is remeasurement of earlier investments. Now, we pass entry for acquisition. There all assets are coming, including this brand. Including the brand, the asset is coming up at the fair value. NCI is at fair value. NCI ka fair value. Imagine, today 25% is 5 lakh. NCI is 45%. So 45% will be how much? So 5 lakh into 45 by 25, you will get 9. Okay, so this is a normal question, nothing different over here. Only thing is you have acquisition in stages. Baki, your consolidated balance sheet is normal one. Okay, coming next, question number 2, this is a bit different. Okay, whichever questions I feel are important, I'll be taking in detail. Normal ones, we'll just go through it. Okay, question 2 is important, bit different one. It's not difficult, it's bit different. Okay, details regarding cost and retail price. Okay, the cost is given, retail price of goods purchased, goods unsold at beginning of the year is given. Okay, the opening inventory, cost is this, retail price is this. Retail is kind of selling price. Purchases, cost is this, retail price this. Then you have some inventory on hand, you have sales for the period. Okay. Apply retail method. Now, this is a question on your Ind AS 2. Inventory. Under your Ind AS 2, for basically a retail price method, when it was used, when an entity has large number of items with a similar margin. Remember large number of items with a similar margin. How you can find the cost of inventory? To do one thing, first of all, whatever is the selling price of inventory? You know, lot of items are there, finding cost is difficult. So you know the selling price of everyone. Deduct the margin out of it. That is retail method. Compute what? Percentage of cost price over the retail price. So this is nothing but, this is actually your cost divided by retail price into 100. Okay, the cost is how many percentage of retail price? Sir, कैसे पता चलेगा? ये आपका total cost, ये आपका total retail price. This is your total cost, total retail price. The total cost is 6250 plus 19500. I'll just take the solution directly. Total cost is 6250 plus 19500. This is total cost and total retail price. Now, how do I find the percentage? What is the percentage of cost over the retail price? The total cost divided by total retail price, 61%. So, can I say cost is 61% of retail price? So, retail price 100, cost is 61. Retail price 100, cost is 61. This is one. Okay. Second, you are required to calculate the cost of closing inventory. You want cost of closing inventory. They have given you retail price. Retail price 23. Can I say cost is 61%? So, ho gaya 23 into 61%. 23 into 61% ho gaya. Okay, then value of cost of sales. Okay, cost of sales you need, it is opening stock plus purchase minus closing stock. You have the cost of everything. Opening stock ka cost available, purchase ka cost available, and in your step number B, you found the cost of inventory also, the closing stock cost available. You get COGS. And last, you want the profit. The cost, COGS is available, sales is available. COGS available, sales available. Can I say you can find out the profit? The closing inventory is retail price ka 61% is the cost. COGS is simple. Profit is nothing but sales minus COGS. Any doubts? Question number 2. Any doubts? Question number 2. I want quick replies, please. Thank you. Come to question number 3. Thank you. Come to question number 3. Compute net defined benefit liability and expense to be recognized in P&L. This is question of Ind AS 19 employee benefits. Net defined benefit liability. Net is nothing but what? Your closing defined benefit obligation and closing plan asset. The defined benefit obligation minus plan asset, can I say it's nothing but your net obligation? Okay. Now, actually the sum is very simple. This is opening balance. This is opening balance of obligation and asset. Obligation is there, asset is there. Current service cost will be added. Interest cost is added. Change in demographic assumption. Okay, now remember actuary changes his assumption, and because of change in actuarial assumption, some gain loss will come. The liability may go up or down. The liability going up or down. Yahan pe the liability is going up. Change in financial assumption. Acha, one more thing. The impact of this, whenever actuary changes assumption, the impact of this comes in OCI. Perfect. This comes in OCI. Interest cost comes in P&L, current service cost comes in P&L. Interest cost, current service cost comes in P&L. Fine. Next, experience variance. This is also basically actuarial assumption wala thing. This comes in OCI. Benefits paid. So actually आपको कुछ नहीं करना है. This all total you do it, you get the closing balance. The closing balance are not given. Find out the totals. Just total कर दो. You will get the closing balance. Now, how do I find the net obligation? तो भैया closing liability, closing plan asset, that's your net. Closing liability, closing plan asset, that's your net. Are you clear? Acha, one more thing was asked. What goes in your P&L? What goes in your P&L? So these two things will go in P&L. Current service cost and interest cost. Same way interest income. This is interest income. Investment income is nothing but interest income, and this is return on plan asset other than interest income. Return on plan asset other than interest income goes in OCI. Yaad aaya? Return on plan asset other than interest income goes in OCI. This comes in P&L. Okay, so this is a normal question, nothing different over here. These three items will be going in P&L. Any doubts? Anybody with this? So first we have just done the totals. Net is nothing but your closing liability minus closing asset. And what comes in your P&L? Current service cost, interest expense, interest income. These are the three things coming in your P&L. Okay, this was question number 3. Now going to question number 4. Okay, question number 4. It's again a very simple question, but they've given you one line just to confuse you. They've given one extra line to confuse you. Okay, the company has come out with some ESOPs. Okay? Entity has year ended on 31st March. Dividend declared on shares accrued to the employees during the 3-year period. Okay. So you are going to get the shares after 3 years. Now during these 3 years, if any dividends are declared, on this ESOPs also you will be getting the dividend. If any dividends are declared on this ESOP wale shares also, which are not yet issued to you, you will also get dividend. So check the line. If the conditions are met, employee will receive the shares together with the dividend which have been declared during 3 years. Can I say this is something new? So you have to stay for 3 years, you will get the shares, plus you will get any dividends which have been declared during these 3 years. Yes, no? Now, if you just check the entire question, there's nothing about dividend given later. उन्होंने बोला you will be entitled to dividend. How much dividend is there? Nothing. So entire question में no information about dividend is there. So this is just to confuse you. So sir, what is the treatment of this? No effect. Why no effect? As no details of dividend given. They have not given any details of dividend. Are you clear? So it's just a normal question how you are solving it of ESOP. It's just a normal question of ESOP. They said that they'll be getting shares plus wo 3 saal whatever dividend was declared, that also they'll get, but dividend detail is not there. That all becomes useless information. Shall I move ahead? Okay, question number 5 is important. So till now question 2 was important. Now question number 5. Question number 5 is important. Okay, you have adopted Ind AS from 1st April 01. So can I say this is the first time adoption? Yes, a first time adoption. Okay. And you have some subsidiaries, associates, JV, all that things. Subsidiary, associate, JV, all that things are there. Now, pay attention. The goodwill recognized in accordance with AS21, AS27. AS21 is basically your consolidated financial statement, AS21. AS27 is how to account for JV in your CFS. And if you recall, AS27, the JVs are accounted by proportionate consolidation method. Okay. So we had some goodwill which has been recognized. Now, you have availed a transition exemption. So whenever you are transiting to Ind AS, so whatever goodwill was there under old books, you can continue the same. Yaad hai aisa? Whatever goodwill was there as per AS, you can continue the same. ठीक है? Up. Pay attention. Because of this Ind AS coming, what happens is few intangible assets you record in your book, even though they were not recognized in the books of transferor, acquiree के books में नहीं था, still you may record that intangible asset in your book. So whenever this basically Ind AS 101 is adopted, the goodwill appearing in the books as per AS continues, but there are two adjustments required. Pay attention. Okay, so that goodwill is continued. Okay. Now, if due to Ind AS applicable some intangible asset needs a recognition, if due to Ind AS coming some intangible asset needs recognition but it was not recognized earlier, so record intangible, reduce goodwill. So because of Ind AS coming, if some intangible needs to be recorded which was not recorded earlier, record intangible, reduce goodwill. That's one. And if you just check over here, you are in business of exploration of oil, gases, all that things. And if I read over here, they've written, the ABC had not taken into account the valuation of underlying oil and gas reserves. You had not considered all that things. If they were considered, अगर आपके पास जो oil gas reserves पड़ा है, can I say you have a right to extract? Oil gas reserves, you have a right to extract. The right is an intangible asset. That was not considered. If you did not consider that right, assets were less, goodwill came more. If you did not consider the right as an asset, the asset came less, goodwill came more. But under Ind AS, that right can be recorded. If right can be recorded, if I record the right, can I say goodwill will go down? Acha, and one more thing. Under Ind AS, do we amortize goodwill? Once Ind AS comes up, do we amortize goodwill or we just test it for impairment? Sir, we don't amortize goodwill, we just test it for impairment. But what they have done over here, considering substance over form, basically substance over form of goodwill to be in nature of acquisition cost, you intend to continue amortization. You intend to continue amortization based on whatever extraction you do, that much you are amortizing goodwill. This is actually wrong. Okay, if we just see the solution given, if we just see the question ka solution which is given. So as per your Ind AS 101, whenever you shift the carrying amount in the previous gap, you can continue, but there are two adjustments which are required. Which are two adjustments required? If you are required to recognize intangible, which was not recognized earlier, so uska value got subsumed in goodwill. You did not record intangible, goodwill came more. If intangible can be recorded, तो आप intangible record करो. So since the right was not recorded, the goodwill was मतलब increased that time, so hence value of goodwill will be reduced and intangible asset will be recognized. Are you getting this one point? So that time intangible was not recorded, goodwill came more. Under Ind AS it should have been recorded. So do one thing, record that intangible, goodwill will go down. And second, you are still amortizing goodwill. That is wrong. You just have to test it for impairment. You just have to test it for impairment. The first time adopter shall apply Ind AS 36 in testing impairment of goodwill at the date of transition, and then once goodwill is recognized, goodwill cannot be amortized. It has to be tested for impairment on annual basis. Any doubts? This question, good one. Question number 5 is good. So question 2 was good. Question number 5 is good. Question 6 is also very good. The second question good. Fifth question good. Sixth question is important. Sixth question is important. It looks simple, but frankly, question 6 is not simple. लगता है बहुत simple question है, but seriously, it is requiring a good amount of brains. Okay, LT Limited is in process of constructing a building. It will take some 18 months and it meets the qualifying asset criteria. Okay, if it meets the qualifying asset criteria, so can I say borrowing cost can be capitalized? Meets the qualifying asset criteria. Okay, now January 1 you spend 5 crores, 30th June you spend 20 crores, again 31st March you spend 20 crores, 30th June you spend 5 crores. Now, you started spending, can I say from January? You started spending from January. Okay, but you have taken a borrowing. Debentures are issued. Debentures are issued 50 crore general borrowing. Debentures issued 50 crore general borrowing. But कब से? July से. July से. Can I say I started spending from January but I borrowed money in July and that's a general borrowing. Acha, so can I say this January and June money, that time I did not had a borrowing came later, July se. Okay, so actually LT had no borrowing before 1st July, did not incur any borrowing cost before that. LT incurred 25 crores of construction cost before obtaining the borrowing and 25 crores you spend after obtaining borrowing. So see, this 2 was before you obtain borrowing. This 2 is after you obtain borrowing. Are you clear? Are you clear? Okay, now pay attention. They're asking you for each of financial year ended 31st March 1, 2 and 3, calculate the borrowing cost which is to be capitalized. 1, 2 and 3. Okay, the first year, can I say it will end on 31st March 1 ko. Okay, so we had this amount spent till 31st March 1, 5 CR, but there was no borrowing only till 31st March 1. See, for capitalization 1, borrowing cost should have been incurred. Activities intended to make the qualifying asset should be in progress and the expenditure should have been incurred. So you are incurring cost. Activities are underway, they are not halted, and number 3, the borrowing cost should have been incurred. Now tell me, what was not there till 31st March 1? What was not there till 31st March 1? Sir, borrowing cost only was not there. So is there anything to be capitalized? I spent 5 CR. I spent 5 CR for construction of building, but borrowing cost is not there. Is there any capitalization to be done? No. So no capitalization. I go to solution, pay attention. So 2000, 2001, borrowing cost eligible for capitalization is nil. You cannot capitalize anything before 1st July. 1st July tak borrowing hi nahi hai. You don't have a borrowing only, so nothing. Now coming back, 31st March 2 tak. Year ended 31st March 2. Can I say borrowing is there? Borrowing there. कहाँ से कहाँ तक है? 1st July 01 to 31st March 02. You have a borrowing. Yes, no? Okay, borrowing is there. Now, if borrowing is there and if it's a general borrowing, you don't have to correlate what amount is spent out of it. I repeat again. If it is a general borrowing, you don't have to correlate what amount has been spent out of it. वो आपको correlate नहीं करना है. So whatever spending has happened, assume वो हुआ ही है इसमें से. Whatever spending has happened, we assume that it has happened out of this only, and even earlier spending happened was now out of this. Earlier spending is now out of this kind of. So now, pay attention. So can I say the 5 crore which you spent on 1st January, can I say they're already spent, that building is already there, or 5 crore is already there? So assume from 1st July that 5 crore is out of this. And assume that from 1st July that 5 crore is out of this. This you spent on 30th June. Yeah, 30th June. So from 1st July it's out of this only. This you spent on 31st March. So from 31st March it's out of this. So can I say this 5 crore from 1st July is out of the borrowed funds. This 20 crore from 1st July is out of this general borrowed funds, and this one from 31st March it's out of borrowed fund. So can I say this 5 crore we have used from general borrowing from 1st July, say, can I say 9 months? Again 30th June ko we spend, that is also used for 9 months, and last wala is for 0 month because 31st March ko we spent. So over here, whenever you have a general borrowing, building is already under construction, whatever is already spent, the day when borrowing comes, it's treated out of that only. The day when borrowing comes, tab se it is treated out of that. So this 5 crore is there for 9 months. From July onwards, it's out of borrowed fund. This 20 crore which you spend on 30th June, from July onwards, it's out of borrowed fund. And this one you spend in March, तो इसलिए यहाँ पे 0 आया. Did you understood? So whenever we have a general borrowing, amount already spent was there, it is also assumed to be out of general borrowing from the day borrowing is taken. Okay, I'll just put a star and write down below. Whenever we have general borrowing and amount was spent before general borrowing, then such amount would be assumed to be spent out of general borrowing. This is a new question. This type of question was not there only earlier anywhere. Is assumed to be spent out of general borrowing from the date general borrowing comes. From the date general borrowing comes. Okay, so you might say, sir, earlier I had already spent it out of my own funds. Yeah, you had spent out of own funds, but day when general borrowing comes, it's assumed to be out of general borrowing. The day when general borrowing comes, it's assumed to be out of general borrowing. So that 5 crore is out of general borrowing, but from 1st July onwards. Another 20 crore is out of general borrowing, but from 1st July onwards. Next one is spent in March, so it comes from 31st March only. Then it cannot be from 1st July. ठीक है, तो यहाँ पे तो this much amount is spent out of your borrowing. इसके ऊपर interest, the rate is 10%. Only one type. Only debentures 10%. So capitalization is 18.75 into 10%, 1.875. Did you got it? I'm telling you, whichever questions are a bit different, important ones, I'm taking in detail. Now, one more year, next year. Now, can I say construction completed in June? Okay, construction completed in June. So, can I say capitalization only till June will be there? Okay, the 31st March, 3 wala year. Can I say only 3 months period is capitalized? Only till June? Okay, so now pay attention. Now only 3 months. So assume this 5 crore, they were used for 3 months. This 20 crore were also used for that 3 months. This 20 crore were also used for that April, May, June 3 months. This is incurred on 30th June, it can't be there. This is incurred on 30th June, it can't be there. And one more thing. If you recall, there was a point under Ind AS 23 wherein interest on interest can also be capitalized. There was a point under Ind AS 23 wherein interest on interest can also be capitalized. So now if you just pay attention for the next year, for 2-3, yes, the 5 crore has been used for 3 months, another 20 crore is used for 3 months, 20 crore is used for 3 months. Previous ka interest, last year's interest, interest on interest is also to be capitalized. So this is also used for 3 months. This we spend in June, that's why 0 month. This we spend in June, that's why 0 month. The total amount used is basically 11.72 crore. Uska 10% capitalization is 1.172 crore. Did you got it? Interest on interest can also be capitalized. That's another point. The two things, whenever we have a general borrowing, amount was spent before general borrowing. Assume that that amount is out of general borrowing once the general borrowing comes in. So from the date general borrowing comes, it will be out of general borrowing only. Are you clear? Question number 6. Okay, question 2, 5, 6. 3 questions, very good till now. Next. This is done. Question number 7 is a normal one. Okay, question number 7 is a normal one. We have a similar question under Ind AS 115. If you just recall, there is a question wherein elevator was there. So we have to do renovation, install some air condition. If you just bring the elevator ka installation hoga when other things are done. Elevator ka installation, once the building is constructed, then elevator is to be fitted. So if you just bring elevator, does it mean that you have completed that much portion work? So while finding that percentage completion, that elevator was ignored. And remember, elevator we were not recording profit, that was continued at cost. So this is the same question which is there. Instead of elevator, the word is air condition. And it is treated as a single performance obligation. So now pay attention. Chalo, let me just take it. 50 lakh is your total price. You have to do renovation and new fitting. One renovation done, then new air condition can be installed. And cost will be total 40 lakh, including 10 lakh air condition. So can I say 30 lakh renovation, 10 lakh air condition? ठीक है. You use input method to measure the cost. आपने cost incur किया 6 lakh other than air condition. Air condition you already delivered. Sir, air condition deliver करने से it will be of no use. Once the renovation completed, then only it can be used. So ignore that. Ignore that. So you spend 6 lakh. You spend 6 lakh out of 30. Total 40 tha, 10 air condition, remove it. So 30 में से 6, can I say 20% work completed? 20% work completed. So for renovation, 20% work is completed. Book 20% revenue. For the air condition which you already brought and kept, air condition जो आपने लाके रख दिया है, just recognize at cost currently. Because you can't fit it, it's of no use as of now. So just recognize at cost currently. So out of my total consideration 50 lakh, 10 lakh remove for air condition ka cost, 40 lakh ka I should book 20%, 8 lakh. So this is a similar question what we had in our material. Any doubts? Anybody with this? Any doubts? Anybody with this? Thank you. Next one, question number 8. Okay, question 8 is also a simpler one. Only thing is day one in your PPE, there is some provision for decommissioning expense. So decommissioning liability is there and decommissioning liability created, added in your asset day one. ठीक है, तो day one asset में decommissioning basically amount is added and credited to liability for decommissioning. Now that liability for decommissioning is changing. कब change हो रहा है? Check करो. So it included 10 lakh for decommissioning. This is already the present value. The already present value. Sum is very simple. Okay, this was 1st April 1. Okay, March 2 May it becomes 13 lakhs. Can I say after 1 year? March 2. Now 1 year is gone. So first of all, asset you depreciate. 1 year gone. उसके बाद हो रहा है तो asset you depreciate. Then unwinding of discount happens. So 10 will become 11. Unwinding of discount happens, so that liability 10 will become 11, and 11 is remeasured at 13. Liability going up by 2 lakh, opposite your asset will go up by 2 lakh. Liability going up by 2 lakh, your asset will go up by 2 lakh. So one, depreciation is to be charged. This unwinding of discount is happening. Now 10 liability became 11 after unwinding. 11 becomes 13, so there is a 2 lakh increase in liability. Opposite effect comes in asset. Done. This was a simpler question. Already we have done more difficult question in class compared to this. Okay, question number 9 is also simple. Question number 9 is also simple. You got a government grant 10 lakh. If I get a government grant 10 lakh, can I say I have to take it to P&L on a systematic basis over the period in which the cost to fulfill the condition will be coming? Okay, so we have to do some environmental protection. Uska cost I have to incur 3 lakh. I have to incur 3 lakh per annum for next 5 years. Okay, I'll be incurring 3 lakh, 3 lakh, 3 lakh, 3 lakh, 3 lakh next 5 years. So can I say I'll be incurring over next 5 years? So 10 lakh which I've got should be amortized over 5 years. Achha, question is how to present such grant. Ye word present hai na? This is important. So grant going to P&L is 2 lakh every year. 5 years may we divide. So now 2 options. 1, expense 3, income 2. That way you show. Or this 2 lakh you deduct from expense. Yaad hai? One option you can directly credit it as income. Second, you deduct from the relevant expense. So either you show expense 3, income 2 lakh, or you show expense 3 minus 2, net 1. These are the 2 ways of presentation which was there. These are the 2 ways of presentation which was there. Any doubts? Question number 9. Any doubts? Question number 9. Thank you. Question 10 is a good one. Again, thoda alag hai. This is different. So this RTP, they've added 3-4 questions which are really good one, a bit different one also. So 2, 5, 6, 10. Okay, 2, 5, 6, 10. Okay, question number 6. How will entity Y account for the incentive? Okay, have you heard the word lease incentive? To motivate someone to come and take the lease. To motivate, the lessor pays to lessee. To motivate the lessee to accept the lease, the lessor pays something. That's lease incentive. That is lease incentive. This word we have already discussed in class. It has already came. Now, I'll come to that. So see, lessor enters into operating lease of property with lessee for 5-year term, monthly rental 1,10,000. In order to induce the lessee to come and take up the lease, we give him 6 lakh rupees at lease commencement for improvement. So that guy is telling, sir, the problem is yours is unfurnished, I'm getting a furnished wala thing. So you motivate him. You say, I do one thing, I'll give you 6 lakh rupees, you do your furniture on your own. I'll give you 6 lakh rupees for furniture. So this is lease incentive. Now how to record this lease incentive? How to record this lease incentive? Now, can I say the income will be coming to you over 5 years? ये income आ रहा है 5 years में. So lease incentive what you are giving should also be recognized as an expense over 5 years. The income you are getting over 5 years, the lease incentive should be recognized as an expense over 5 years. Check the solution. Okay, the lease payment includes your fixed lease payment less any lease incentive payable. इसके ऊपर we had a question. Now, यहाँ पे what happens is, at commencement we are giving 6 lakh rupee. Don't take as expense day 1 6 lakh. No, don't take as expense day 1 6 lakh. The deferred lease incentive to cash. Deferred lease incentive to cash. Now, every month you are getting rent of 110. every month you are getting a rent 110, तो cash debit 110 to lease income take 1 lakh and ये आपका deferred lease incentive. The deferred lease incentive got adjusted. The deferred lease incentive is 6 lakh rupee over 60 month, 5 years. 6 lakh rupee over 60 month, 5 years. So can I say you're booking an expense 10,000 every month? You're booking an expense 10,000 every month. Indirectly from your income, 10,000 went away. Are you getting my point? Even though you got 110, don't assume 110 is your income. Out of 110, 1 lakh is that, and बाकी जो deferred lease था, वो deferred lease incentive is getting reversed. So income is over 60 months. The deferred lease, the lease incentive what we are paying should come as an expense also over how many months? 60 months. Shall I move ahead? There is also one more way to do it. So cash to lease income you can do 110. Cash to lease income 110 and then P&L to deferred lease incentive 10,000. So income 110, expense 10, net becomes 1 lakh. Net becomes 1 lakh. Achha, now another question. Instead of giving 6 lakh to him as lease incentive, I built the furniture and furniture remains in my ownership. Instead of giving 6 lakh rupees to him as lease incentive and he does his furniture on his own, I built furniture, furniture remains as my ownership. If furniture remains as your ownership, then you should record it as your PP in books. Yes, no? The second question B, what is given? Here, entity Y provides 6 lakh to entity X for leasehold improvement, which will be owned by entity Y. Which will be owned by entity Y. Okay, so over here what happens is, when I'm spending 6 lakh, the furniture comes up, wo mera hai, so it's PP to cash. And can I say on PP, depreciation will come over 5 years? Ye PP pe depreciation will come over 5 years, so every month 10,000 depreciation. So indirectly now you get 110, 10,000 will be depreciation every month. You get 110 and 10,000 depreciation. Kaise aisa 10,000 depreciation? 6 lakh divided by 5 years, 120 per year divided by 12 crore, 10,000 a month. The first wale case, it's not my ownership, so I'm not recording PP. Second case, it's my ownership, I'm keeping PP. Did you understood this? Good question. Again, a bit different one. 2, 5, 6 and 10, they are good. Okay, 11th is fairly simple. 11th is very simple. You acquired 75%, you paid this much. NCI ka fair value is this, net asset is this. We just have to find gain on bargain purchase. If NCI is at fair value, the NCI will be at 0.2. If NCI is at proportionate net asset, so 110 ka 25%, 1.1 ka 25%, it's 0.275. Very simple question just to find out gain on bargain purchase if NCI is at fair value, if NCI is at proportionate net asset. Shall I move ahead? Shall I move ahead? Okay, next question in 12. Ind AS 41, again a simple one. What do? You do fishing from lakes, ponds, dam. Okay, you do fishing from lakes, ponds, dam, and your activity consists only of catching the fish. Okay, you just do fishing from lakes, ponds, dam. Is it covered under agricultural activity? Is it covered under agricultural activity? Answer is no. If you remember, agricultural activity kya tha? Management by entity of biological transformation and harvest of biological asset. You have to manage. You have to manage the biological transformation. If you don't do anything, you are unmanaged resources, say you are just harvesting, that is not agricultural activity. So check next question. This is, you should have a management of biological transformation. When fishing management has to do all that things, mere fish harvesting without management cannot be agricultural activity. So it cannot be covered under your Ind AS 41. Okay, question number 13. Okay, 13 is also normal one, no problem. Now, we just have to say whether it meets the definition of financial asset and financial liability. Is it a financial asset, financial liability? Now, remember, financial asset is what? Financial asset is what? Something which is cash and cash equivalent, investment in equity, or you have a contractual right to receive cash or cash equivalent. Contractual right. Okay, financial liability, you have a contractual obligation to pay cash or cash equivalent. Contractual obligation to pay cash or cash equivalent. Okay. Now, bank has given a 5-year loan to someone. Okay, bank has given a 5-year loan. So can I say for that entity, they have an obligation to pay after 5 years, contractual obligation. They have a contractual obligation to pay after 5 years. It's a financial liability. Okay, bank has also given an OD facility. OD is also a financial liability. So you are contractually you are liable to pay to bank OD amount also. This is coming under financial liability. Did you got it? Okay, next. Entity A owns preference shares of B. Entity A has invested in preference shares of B, and preference shares entitle you to dividend but not voting right. Acha, so company which has issued preference. Okay, company which has issued preference, entity B, for them it can be a liability, it can be a equity. If they are convertible preference shares, compulsorily to equity. If they are redeemable preference shares, it will be liability. The one which has issued, for one which has issued, it can be equity or liability. But one which we have purchased, if I purchase the preference shares of someone, can I say for me it's an investment and I'll be getting my money back? So it is basically a financial asset, a contractual right to receive cash. This will become a financial asset. अच्छा, तो one which is issuing, उसके लिए equity or financial liability. For one who is buying it, only financial asset. Okay, now you have a obligation for some income tax. Okay, income tax is not arising out of contract. It's a statutory obligation. It's not a financial liability. It is not a financial liability. Okay, group of people are seeking compensation for damage as a result of land contamination done by you. So your company might have done some land contamination. People have filed a case against you, and now you may be required to pay damages. Okay, is it a financial liability? No. I don't have a contract with the group of people. I don't have a contract. I may do a provision as per Ind AS 37. I may do a provision as per Ind AS 37, but it's not a financial liability. Did you understood question 13? Okay, next 14th one is important. Okay, the till now 2, 5, 6, 10, 14. Question 2, 5, 6, 10 and 14. These are important till now. Now coming to question number 6. This question looks trickier. It's not that tricky, but looks trickier. Now you have both ordinary shares and equity classified preference shares. Okay, if it is an equity classified preference shares, the dividend on it, if it's an equity classified preference shares, dividend on it will be coming in your P&L or directly other equity, retained earnings. It's an equity classified. If it's equity classified, the dividend goes directly in other equity, retained earnings. It doesn't go in P&L. Acha, so if they give me profit after tax, the profit diya hai na, profit will be before the preference dividend, because it's an equity classified preference. It will go in other equity. ठीक है. Now you have this ordinary share, you have this treasury share. Now question आता है, sir, ये treasury share क्या है? And then they have given some preference share. Treasury shares are the shares which you have already bought back but not yet cancelled. आपने already buy back कर लिया but अभी cancel नहीं किया है. What is treasury share? I just put a star here and I write down below. Treasury shares are the shares which entity has already bought back. ये already buyback हो गया है. They are not there today. Already bought back but not cancelled. आपने अभी तक cancel नहीं किया है तो it is lying in treasury. ऐसा. They already bought back. If they already bought back, can I say they are not there today as such? If they already bought back, they're not there today. So can I say today I don't have 30 lakh shares, I have 25 lakh shares. Today I don't have a 30 lakh shares, I have 25 lakh shares. Bonus is not 150, it will be 125. It's not 150, it is 125. यहाँ पे it is minus 2 lakh. And यहाँ पे issued is 4 lakh. So they already been bought back. Okay, so now I have a question for you. First of all, profit given is 46 lakh. Okay, whether the profit will be before preference dividend or after preference dividend, profit is PAT. Profit is your PAT. Before preference dividend or after, sir? Before. Because it's a equity classified preference shares. To deduct the preference dividend, they came out with preference dividend 1.2 per share. So 5 lakh shares पे 1.2. 5 lakh into 1.2. Are you getting 6 lakhs? अच्छा, उस पे you have a deductible under tax. It's deductible under tax. So 6 का 30% will be tax benefit. तो into 0.7 कर दो. 6 का 30% will be tax benefit. तो 0.7 कर दो. They've clearly given they are deductible for tax purpose. अच्छा, तो 420. तो out of 46 lakh, 420 goes away. Out of 46 lakh, 420 goes away. Can I say profit for equity shareholder is 4180? Profit for equity shareholder 4180. Okay, then let me just go to solution. Okay, this is profit for equity shareholder. Profit for ordinary shareholder 4180. The NP given would be before preference dividends. Or why before preference dividend? They're equity classified. Now coming to number of shares. So we got profit divided by number of shares. Weighted average number of shares outstanding during the year. Weighted average number of shares. Now, can I say effect of bonus is to be given as if they are there from very beginning? ऐसा याद है? Effect of bonus is to be given as if they are there from very beginning. Okay, so don't count opening is 25. Don't count opening आपका 25 था. Count opening as this. Count opening as not 25. It is 25 plus 125. It is 26 lakh 25,000. So don't count it as 25 lakh. It is 25 lakh and bonus is 125. So this is coming as 2625. So 2625 is there from 1st April. Can I say till 1st May? 2625 is there from 1st April to 1st May. April to 1st May. Can I say only 1 month? So यहाँ पे 26 lakh 25,000 shares are for 1 month. Now 2 lakh gone. So can I say now 24 lakh 25,000 are there? May to November. May to November. So May, June, July, August, September, October. 1st November है into 6 by 12. And then 4 lakh came in. So can I say it is 2825? This is for 5 months. November, December, January, February, March. So bonus key effect is to be given from very beginning. So don't think it's from 15th April. It was there from 1st April only. So from 1st April we had 2625 shares. They were there till 1st May. Okay, now 1st May ko minus 2 lakh. So now 2425 from 1st May to 1st November. And 1st November to 31st March, it is 2825. Are you getting this? Okay, so check the solution. So 26 lakh 25,000 for 1 month. 24 lakh 25 for 6 months. 2825 for 5 months. Weighted average number of shares is 2608,333. Okay, so you have a profit attributable to ordinary shareholder. You have a weighted average number of equity shares for them. Can you find out basic EPS? Can you find out the basic EPS? Basic EPS is coming as 1.6. That's the sum. The sum is over. Just we had to find basic EPS. Okay, the only point was, sir, ये treasury shares क्या दिया था? They are shown as negative. So they are already bought back. They are already bought back. So don't think we have 30 lakh shares. We have 30 minus 5. We have 25 lakh shares. Don't think we are coming out with 150 bonus. It's 150 minus 25, 125 bonus. Are you getting it? The treasury shares are the shares which entity has already bought back but not cancelled. Okay, next one, question 15 is also good. Okay, 15th is also good. It's easy as such, but acha question hai. Now, pay attention. In 2003-04, after the financials of last year were approved, okay, financials of last year are already approved, a defect is discovered. And they've clearly written the defect was not discoverable by reasonable or customary inspection. If you had done some proper inspection also, still that defect could not be discovered. The 31st March ko you could not discover defect. Books are also approved. Next year mein some defect is discovered. And because of that, extra 1 lakh cost comes. Extra 1 lakh cost comes relating to last year wala sales. Plus, there were some additional 20,000 required to rectify the defect in products sold in 3-4. Before the defect was detected and the production process is rectified, and 5,000 relates to item of inventory at 31st March 3, ठीक है. Now, pay attention. The defective inventory का cost is 15. Selling price less cost to complete was 18. Achha, selling price less cost to complete last time taken was 18. But can I say this rectification is now required 5,000? 5,000 relates to inventory ka rectification. Okay, the 1 lakh relates to what? 1 lakh relates to goods sold in last year. We have to now rectify the defect in this year. That 1 lakh comes. Okay, 20,000 relates to goods sold in current year before we found the defect. Goods sold in current year, but before we found the defect, we have to rectify. Uska 20,000. And there is some inventory of last year. There's some inventory of last year. The cost was 15 and NRV was 18 last time. So we would have valued at 15. Yes, no? You would have valued at 15. But now we understand it needs a rectification 5,000. So NRV 18 nahi hoga, 18 minus 5. It becomes a kind of WIP. NRV 18 nahi hoga, 18 minus 5. So NRV becomes how much? 18 minus 5, 13. 13. And if it was known, we would not have valued. If it was known, we would not have valued it at 15. We would have valued it at 13 only. The 2,000 inventory may going down. Okay. Now my question over here. This mistake came to be known now. Last 31st, even though we had done a proper inspection, still mistake could not have been found out. Okay. Is it a prior period error? Is it a prior period error? Did you understood question? No, not a prior period error. Reason, even though you would have done a proper inspection, still nahi milta. They've clearly given that. They've clearly given that it was not discoverable by reasonable inspection as well. It's not a prior period error. So now if I find an error, how do I account? If it's a prior period error, remember we have to restate the previous year. It's not a prior period error. Don't restate previous year figures. This will be accounted as change in accounting estimate. Okay, to check the solution. The mistake was neither known nor reasonably possible to detect last year. Possible ही नहीं था उसे detect करे. So it is not a prior period error. And as it is not a prior period error, it is accounted like a change in accounting estimate. If it was a prior period error. If it was a prior period error, the cost relating to last year, we rectify the previous year's balance. याद है? Previous year figures are restated, but it's not a prior period error. So you have to treat it as change in accounting estimate, that entire extra cost. So 1 lakh, inventory going down by 2,000, that all will be coming in this year only. Additional cost will be expensed in current year only. Additional cost will be expensed in current year only. Don't restate previous year figure. I just write over here, don't restate previous year figure. As it is not prior period error. Are you clear with this? Are you clear with this? Okay, next one, question number 16. Okay, 16. You buy 10,000 convertible preference shares for cash payment 40,000. 25 you pay now, remaining 15 you have to pay after 2 years. I said 25 I pay now, remaining 15 I have to pay after 2 years. So can I say I should take it at its present value? So my financial asset का value, the fair value of financial asset 25 which I am paying now, 15 which I pay after 2 years, उसका present value. Done, हो गया. So you will show the financial asset at that value. Clear? Question number 16 is over. Question number 16 is over. Okay, 17th is a good one. It's not difficult but a good one. It's not difficult but a good one. Okay, you applied for a term loan from bank. You applied for a term loan from bank and bank asked for a personal guarantee of one of the director. So Mr. Pure Joy, one of the director is given a guarantee. Okay, the company wanted a loan, director gave a personal guarantee and we are not paying anything for providing the guarantee. The director is providing guarantee, we are not paying him. We are not paying him. How to account for this financial guarantee received? How to account for a financial guarantee received? Now I tell you, Ind AS 109. Ind AS 109 has given you the accounting for financial guarantee, but it's accounting for financial guarantees given. अगर मैंने guarantee दी है, remember the parent gave guarantee on behalf of subsidiary, we had questions. If at all we are giving guarantee, can I say we should charge the guarantee commission? And that guarantee commission should be recognized as an income over the period of guarantee for you. So they have given you accounting for financial guarantee given. Can I say यहाँ पे company has not given a guarantee, company is getting a guarantee. And company doesn't pay anything for it. You're getting a guarantee, you're not paying anything for it, no accounting required in your books. No accounting required. But do I need to disclose that director has given a guarantee or related party transaction? Do I need to disclose the guarantee is given by director? Yes. So accounting will not be there. We are not giving guarantee. If we would have given guarantee, we are not charging, still I would have debited P&L. If you have given guarantee, we are not charging, we debit P&L. Yeah, basically for that subsidiary. For that subsidiary ke liye, we gave guarantee, we did not charge anything, we debited our P&L or it's an investment in subsidiary kind of thing. But that's financial guarantee given. This is yahan pe we are getting a financial guarantee. Check the solution. Okay, so first of all, they have given the definition of a financial guarantee, a contract that requires the issuer of guarantee to make payment to the holder of guarantee if the debtor fails to make payment. If that guy doesn't pay, I'll pay. That's a guarantee. In this case, it does qualify as a financial guarantee contract. It does qualify as a financial guarantee contract, but what they've given over here is your Ind AS 109 provides accounting for issuer of guarantee. We are not issuing. यहाँ पे we are getting. However, it does not tell you about the financial guarantee's beneficiary. If we are getting a financial guarantee, how to account, it's not given. In the current case, you are a beneficiary and you are not paying anything for it, so you will not be required to account for it. You will not be required to account for it. However, disclosure. Okay, you have to make disclosure as per Ind AS 24. Ind AS 24 में disclosure में amount of transaction, outstanding balance, terms, guarantee given or received, इसकी details. So no accounting, just disclosure in notes. Are you clear? Are you clear? Yeah, everybody needs to reply. If you reply, you'll enjoy the classes. I tell you, if you read this on your own, it will at least take double time. Yeah, if at all RTP you're doing on your own, rest assured it will take 5 hours. Currently, we are able to finish it in 2 hours. It's always good for you that you are able to finish it faster. Now, entity acquired 2 trade secrets. आपको कोई 2 recipe मिली in a business combination. Okay, trade secrets or recipes if I'm getting, can I say it's a kind of intangible asset? It's a kind of intangible asset. Now, 2 recipes we are getting. Okay, now recipe A is patented, recipe B is not legally protected. Tell me, so which one I can record as an asset in my book? It comes under business combination. पहले वाले में तो patent है, तो can I say it arises out of contractual or legal right? Okay, so if an intangible asset is identifiable, we record it. When do I say it's identifiable? When do I say it's identifiable? Either it meets contractual legal criteria or it meets the separability criteria. So when do I say it's identifiable? Contractual legal criteria or it is separable. So this is patented, contractual legal criteria. This is not patented. So contractual legal criteria is not there, but if you are able to sell the recipe, तो can I say it fulfills separability criteria? अगर आप ये recipe बेच सकते हो, even though okay you don't have a patent, but if you are able to sell it, you have still the separability criteria, so both of them can be recognized. Check over here. First one, recipe A meets contractual legal criteria, recipe B is not protected, however it is identified as separable. Because you are able to sell that recipe, you will be able to get money. It fulfills separability criteria. That will also be recognized. So both the unpatented should also be accounted as a separate intangible under business combination. Are you clear? Are you clear? Okay, 19th question. Next one, question number 19. Okay, in your question number 19, whenever you have an interim financial reporting, what are the periods for which? Period kaun sa hoga, balance sheet, P&L, all that things. What are the reporting periods in an interim report? Okay, as such it is 30th September. If you publish quarterly or if you are publishing half yearly. अच्छा, अगर आप quarterly publish कर रहे हो. Okay, now if you are publishing quarterly, first of all, balance sheet, can I say I'll need at the 30th September 1? 30th September 1 balance sheet, and comparative, which one you need? 30th September 1 के साथ comparative, which one you need? 30th September 2000? 30th September 1? 30th September 2000? That's actually wrong. So there's a printing mistake in our material. I repeat, there is a printing mistake in our material. It's not amendment. हमारी book में एक printing mistake है. I'm accepting. So just pay attention. If you see the words written, theory is fine. In our example, we have something wrong in our classwork material. So balance sheet you need at the end of current interim period. Current interim period is, can I say यहाँ पे 30th September 01. And comparative you need when? As at the end of immediately preceding financial year. Okay, what is the end of preceding financial year? That is 31st March 1. The balance sheet 30th September 1, not previous 30th September. End of immediately preceding financial year. Okay, so can I say preceding financial year was 2000, 2001? Preceding financial year was 2000-2001, so it will be 31st March 2001. Are you getting it? Only yahan pe there's a mistake. In our material, it's written 30th September 2000. In our material, it's written 30th September 2000. Change it, make it as 31st March 1. Shall I move ahead? Bala, Venkatesh, are you clear? Okay, now P&L mein, if you are preparing quarterly, P&L, so you need July, August, September, quarter bhi chahiye, and year to date is also required. So July, August, September this year, July, August, September previous year. Year to date, April to September this year, April to September last year. But in your cash flow and statement of changes in equity, you only need year to date. Yaad hai? Cash flow and statement of changes in equity, only year to date, April to September this year, April to September last year. So check the solution. If you are preparing quarterly, अगर quarterly बना रहे हो, balance sheet 30th September 1, यहाँ पे March 1. 30th September 1 and March 1, not September 2000. P&L में, you need 3 months, current 3 months previous, and you also need year to date भी चाहिए. But in your statement of changes in equity and cash flow, only year to date you need the 6 months ended September 1 and previous 6 months. Are you clear? Acha, this is if you are preparing quarterly. If you are preparing only half yearly, तो can I say 3 months निकल जाएगा? If you are preparing only half yearly, so in P&L that 3 months will not be there. It will be 6 months only, April to September. So everything else will be same, only that 3 months will go away. Everywhere it is directly 6 months. So P&L में 6 months, and यहाँ पे तो anyways it was 6 months, and balance sheet is 30th September 1. Previously not 30th September 2000, it's March 2000. So in our material, there is a printing mistake over here in this. Okay, Gaurav has a question. Sir, I watched your May 22 CA inter-audit batch recording. Is there anything else which I need to cover? Gaurav, just one thing. You need to cover the last 3 RTPs. But last 3 RTPs, if you're covering, that will be more than sufficient. You don't have to do anything else. Okay, last question. Question number 20. Last question number 20. 1st January, the carrying amount of relevant asset of a division. Okay, so there's one division, uske assets, they were goodwill, PP, inventory. 1st January, you begin to market the division and you estimate you will get 6.4 lakhs. Okay, so can I say now that division is for sale? You actively market it. If you have started actively marketing, so it fulfills the criteria for asset held for sale. And when something fulfills the criteria for asset held for sale, it will be a part of discontinued operation. So discontinued doesn't mean you have already stopped. Either you already stopped or it meets the criteria for held for sale. Discontinued doesn't mean already stopped. Either already stopped or it meets the criteria for held for sale. So now it will be meeting your discontinued operation ka criteria, and this have to be valued. And if you just remember, we have a non-current asset or a disposal group held for sale. If disposal group held for sale is there, it will be valued at carrying amount or fair value less cost to sale, whichever is lower. Okay, the carrying amount of disposal group 1.2 plus 4 plus 2. Are you getting 7.2 carrying amount? Carrying amount is 7.2 and fair value less cost to sell is 6.4. Okay, fair value less cost to sell is 6.4. So can I say there's a loss coming 0.8? Acha, 0.8. I should first allocate towards what? Goodwill, PP, inventory. Kisme le jao? So 0.8 you allocate towards goodwill. So can I say now goodwill will become 0.4? Ab goodwill is 0.4, PP is 4, and this is 2 lakh. Now, once it is classified as held for sale, the depreciation on PPE stops. Once it's classified as held for sale, the depreciation on PPE will stop. Okay, later in 30th April, you got 6.6. Acha, to usme 6.4 wala becomes 6.6. Can I say it's increasing? But I can't reverse the impairment loss of goodwill. I can't reverse the impairment loss of goodwill. वो नहीं कर सकता हूँ. ठीक है. Now, as at 31st March, so 6.6 31st March का value है, but I can't reverse the impairment loss of goodwill. And now your inventory 31st March is 1.8. Inventory 31st March is 1.8. Acha, so can I say inventory is now 1.8, this is 4, and this will be 0.4 only. We don't have to depreciate PP. So carrying amount 0.4 plus 4 plus 1.8, it's 6.2. Carrying amount 6.2. Now fair value less cost to sale 6.6. Carrying amount is 6.2. Inventory now is 1.8. Inventory will be valued as per Ind AS 2 only. So this is coming 6.2, 6.6 is fair value. There's a reversal coming 0.4. I can't reverse impairment loss of goodwill. So check out what is asked. Explain the disclosure requirement related to sale of division and the accounting treatment of property held for sale. Property held for sale will not be depreciated. It continues at 4. Acha sir, iska disclosure. This all are related to discontinued operation. If something is related to discontinued operation, can I say uska ek single line comes in P&L? Profit or loss from discontinuing operation before tax. And उसमें उसके goods sold वो भी आ गया and some loss impairment return वो भी आ गया. That goods sold and loss impairment everything उसका detail you can show it in notes. So that's P&L. Balance sheet में this asset are for disposal group, they will appear under your current asset even though it's a PP. It will appear under current asset. It is nothing but held for sale. So check solution. We have a similar question. So on 1st January, it meets the criteria as held for sale. ठीक है, it's held for sale. A carrying amount 7.2 है. Fair value less cost to sale is 6.4. So there's a reduction 0.8 allocated to goodwill. Reduction 0.8 allocated to goodwill. Okay, later that 6.4 is becoming 6.6, increase हो रहा है, but we can't reverse the impairment of goodwill, leave it. Now March में PP should not be depreciated, it continues at 4 only. Inventory now is 1.8, goodwill remains 0.4 only, this is what is to be done. The division will be discontinued operation, you have to have one single line in P&L. So P&L should disclose a single amount related to it. उसमें profit loss as well as impairment profit loss related to it is to be shown. That can be shown either in P&L or in notes. And balance sheet में this all will be appearing separately as basically the items which are held for sale. Did you got it? Okay, Venkatesh has a question, sir. How you concluded that it's a discontinued operation? Dear, एक तो word लिखा था division. If you check the question, the word written was the division. Okay, so I assume division is what? It's basically a part of that entity. Acha, number 2. When do I say that it is a discontinued operation? It doesn't mean it should have been discontinued. Even if it meets the criteria for held for sale, still it's a discontinued operation. So division hai, it meets the criteria for held for sale, it becomes a discontinued operation. Are you clear, Venkatesh? Are you clear, Venkatesh? Done. We are done with FR RTP May 23 exam. There were really good questions, around 6-7 questions were really very good. I'll again tell you which were the good questions. Okay, 17, 18 is good and 15 is good. Okay, so we have written list. 14, 15, 17 and 18. Okay, so 2, 5, 6. If you want, you can just write it. Please make sure you revise at least this many questions. At least this many questions, you do it properly. Question 2, question 5, question 6, question 10, 14, 15, 17, 18. Out of your 20 questions, these 8 questions were a bit different. So this time's RTP had some good questions. They were not that difficult, but kuch alag tha. They were seriously not difficult, but they were a bit alag. And that's why you need some practice. If practice is not there, trouble is there. Okay, any doubts? Anybody from your side? And I tell you one thing. if you want to have something which you never had, if you want to have something which you never had, you need to do something which you've never done. If you want to have something which you never had, you need to do something which you've never done. So you need to put in that extraordinary efforts to get that extraordinary results. If I want to have something which I've never achieved, imagine you've not got All India rank and you want it. If you want All India rank, you need to put in the efforts which you've never put in. So learn to take risks, learn to put in lots and lots of efforts, and try to think of something which you never had and try to achieve that by putting your efforts. Chalo. Thank you, Venkatesh. Thank you, Bala. Again, next Sunday, probably I'll be coming out with RTP of audit, or there are few extra questions of FR which I want to cover. But mostly I'll take up RTP, then I'll go to that extra questions. So next Sunday, I'll take up the RTP of auditing. Thank you, Lucky Star. See, if any of your friends could not attend today's session because they were stuck up with some work or they had some other classes or something, please tell them to watch this session. The whole of your RTP, if you try to do on your own, it will take around 5 hours. We finished it almost in 1 hour 35 minutes. So that 1 hour 35 minutes is what is be required from your side, and this is going to save time for you. So very good RTP this time. Few questions were really very good. We already highlighted which were the good questions. And from amendment side, there is as such no amendment except the chapter of which one? Corporate social responsibility. And that too hardly 1 or 2 things were changed. The FR is such a subject where changes doesn't come much. As a student, you should never be fearing that, sir, should I take FR right now or should I wait till the end? So always recommend your friends to start with FR at earliest. An exam may, I personally recommend before 5 to 6 months of exam, the whole syllabus should have been completed coaching wise. Last 5 months or last 6 months has to be only the self-study time wherein you're studying, you're writing 2 mock tests and then you're going and appearing for examination. So all of you, please make sure you're writing at least 1 mock test for each and every subject. I'm using the word at least one. At least 1 mock test for each and every subject you write. Don't go and directly write in examination. That is not going to help you. Venkatesh, yes, full audit ke amendments will get covered next time, so don't worry about that. The audit RTP with the audit amendments I'll be taking up on next Sunday. Any doubts? Anybody? Chalo, so see you all later. All the best for your examinations. Crack your exams. Have a great preparations. Anytime you are stuck up, feel free to call me. Bye-bye. Take care.